G'day investors, this is June 2023. This is the US dollar DXY price analysis. On our weekly, we're still in a pretty bearish outlook, and on the daily, we've just broken up into a neutral positioning after being bearish for a number of days. And on the hourly, we've actually come down and reaching a potential pivot area with a potential bullish divergence happening. So let's look at each of these. On the weekly, first off, the triple moving average of the price chart and the moving averages of the CCI 150 are both in decline, giving us this bearish signal. You can see there also on the longer term time frame, it's been bouncing just around the 50% level in terms of price action. The key area to look out for is if it breaks below the 61% Fibonacci, that's a potential for a further decline. But at the moment, it's looking kind of stable, at least in terms of potential upside. On the daily, you can see there it was broken down into a bearish signal. But you notice I did draw this divergence, a bullish divergence on the CCI versus a bearish divergence on the price chart. Now for this to work out, we need to see the price break above that trend line. If I extend that trend line, it should break above there. Our initial target area will be this area between the 38% and the 50% Fibonacci levels. These usually play out, these divergences. Sometimes they fail. And for this to fail, we need to see the price and the CCI break below these lows here, which will invalidate the divergence. So that's our medium to longer term outlook in terms of a bullish scenario potentially. On the hourly, as I said, it's broken down through these ascending diagonals. It actually hit, we did have a bearish divergence here. You can see that bullish divergence on that price there versus a bearish divergence. It broke through the channel there and it hit our initial target there at between the 23 and the 38%, and then eventually broke further down to the downside. And it's come down past the 61%, which, as I said earlier, that's a key area to look out for on any Fibonacci level. If it breaks below that, typically it could mean further declines. But in this case, we're looking at a potential retrace to the upside, not necessarily a long-term bounce, but it could just be a short-term bounce before making further declines in the price. And the way we look at this is we draw the divergence between that range there versus the price chart. Let me draw that again. So between that area, and that should be probably extended to that area there. So again, you can see there more clearly if I maximize that. That's pretty much a flat, let me just put that on the spikes to make it more accurate. That's pretty flat. So that can be considered a divergence. So if that turns up, then it's gonna be more of a confirmation of a bullish divergence. But if it continues to the downside, if the CCI continues to the downside, then it will invalidate this divergence. So for this CCI to continue to the upside and the price then to break above this descending trend line, then we're going to look at a potential target area between that Fibonacci level. So if it breaks above this descending trend line, we're going to draw a Fibonacci target range. That's a bit close. We can put the first initial target area will be, I'm going to extend it to that should go there. So somewhere in that range between the 38% right up to the 61% level. So that'll be our initial target area if it breaks above this descending trend line. Now if it breaks again, as I said, if it breaks above that 61% retracement, then we're going to look at slightly further upside and possibly even approaching this ascending diagonal trend line. If I zoom out there, you can see there the patterns. It's kind of busy, but I've left those in there for historical purposes where those previous divergences have worked. As well, I've got up here a back test going long and a back test going short. You can see there while the price is going up, you would have taken the long trades only, and when prices start declining, you would have taken the short trades only. And the way to take those trades only is when the weekly and the daily are aligned. So for example, back here when the price is going up, you would have taken long trades on the daily, primarily long trades, and during that period as well, long trades primarily no short trades, and vice versa. You would have taken short trades where they're showing up on the daily and the weekly only, hence those weekly and daily charts for trend analysis. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also do scans of weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.